Guys, I'm really sorry for being late. It's just I powered my PC and then I think it started updating, and so that's what caused the delay. But please let me know if you can hear so that we can start right away.
Yes, I can hear you, sir.
Hello, can you hear me?
Yes.
Okay.
Yeah.
Somebody has confirmed that he can hear. Okay. First of all, happy Independence Day. Even though when you make that statement, there are a lot of questions on your mind. So, because we are recording this, we will not bother to go into many of those questions. But you all know what I mean as Nigerians. But happy Independence Day all the same.
Thank you, sir.
So we have a 3-day course, and I hope you will be available. My advice to you would be that you should ask questions, pay attention. We will record them. We have previously recorded sessions that you will find useful. So the first thing I will tell you is that the way the crypto industry or space is moving, nobody can confidently tell you that he will teach you all there is to know. That's just impossible. That would be a false claim to make, because even as we speak, new developments are happening. The rate of innovation is just totally new. And so you will do yourself a world of good if you just, from what you will learn in this training, you aspire to know more. Always be inquisitive, always be looking for more knowledge. Otherwise, this space will leave you behind. I'm just being honest with you. The speed of innovation is unbelievable. So you must be up and going so that you will know what's going on. Some of the things I will give you, in fact, let me send a chart to you. These two platforms are platforms that you must immediately try to connect to. Cointelegraph, I think it's .com. Cointelegraph.com. Yeah, I'm trying to send that to you. And then I don't know, I think coindesk.com also, but I'm not sure if it's .com or not, but it's likely to be. Then you should be on Twitter and connect to some of the main guys in crypto, people like Vitalik Buterin. Unfortunately, we cannot find Satoshi Nakamoto. He has disappeared. But that would have been a good person to try to follow. And then once you follow one or two, you'll find that the algorithm will start suggesting.
Who is making that noise now?
Yeah. So you can also, you should be on YouTube as well. Look for somebody like Andres Antonopoulos. I'm trying to put his name here. These are resources you will find useful. As I'm dropping them from the very beginning, in case I forget. Look for Andres on YouTube. He's also on Twitter. The reason why I recommend Andres is that Andres teaches cryptocurrency knowledge, devoid of price analysis, market analysis, and things like that. He's just strictly focused on the technology itself. And for this space, you need to really understand the technology. before you even start trying to make money. Because if you understand the technology, you are a more balanced investor than most. And also, if you, well, for trading, it's pure analysis of markets, charts, and things like that. But an understanding of the technology will also let you know which coin makes sense to people begin to observe. So, thank you for being here. It's 4 people that paid, so I expected to see 4 people. But if I take out TJ, who is a veteran in this space, I'm only seeing 3. And people paid for this, they haven't shown up. Well, I would just assume that they are busy somewhere. We'll have a recording waiting for them whenever they do join. So let me just kick off the training. And normally, my slide is blue, but because of my beloved country, I turned it to green today. So, please let me know if you can see my screen. Can you see my screen?
Yes, sir.
Okay, thank you very much. So, well, the name of the class really doesn't matter. The important thing is that we're sharing knowledge, but I just branded it as the Independence Day promo class. So a few thoughts you would need to, I just like to remind people of. Warren Buffett's one that said that if you don't find a way to make money while you sleep, you will work until you die. And you find that in the case of many of our parents. My father is long gone, but I made up my mind I will not park in the place my father parked, if you understand. Well, as a preacher, I had said that, and he stuck with me over the years, Pastor Chris. He says, don't park where your father parked. Don't park where your mother. In other words, don't let it's good to emulate things from your parents. But if they had things that you don't like, emulate them selectively. You know, my father was a teacher. When he retired, well, maybe that's where I got the teaching from. I kind of like to teach people, which is a good thing. But when he retired, pension, as you know, is really nothing because inflation keeps going. If you remember when we were kids, and just some ground rules, please. If you drop a message, please know that at the end of the training, we'll be having a Q&A session. So never mind, you can, so that you won't forget, just drop it in the live chat. You will have it on record, and then we can take it from there. So pension is really nothing, and that's what the British taught us generally. But the British themselves, you notice, they hardly retire. They hardly retire, and inflation will totally wreak havoc on your pension. For instance, way back in the day, I think a bottle of Coke was 3 naira, or even less. I don't know. But today, a bottle of Coke is somewhere around 200 or more. I don't drink Coke, so I don't know, but I have a fair idea where these things are. Now, imagine if 15 years ago, your pension was 15,000 naira. And then the rate at which inflation has gone. That your buying power within that 15K has totally almost. And so if you leave yourself at the mercy of such things, sorry. So you must find a way to make money work for you. That is the secret of becoming rich.
I'm in a meeting. I'll post it to your room. So all of please go and do it with my friend.
Is cryptocurrency. And cryptocurrency is a function of knowledge, which is why we always tell people, go for knowledge first. Don't jump into the market to start trading. I have never seen where somebody wants to learn how to drive. He says it's third mainland bridge. You will first go and start driving. In fact, he doesn't even bother learning. Just starts the car and gets on third mainland bridge. That's a recipe for disaster. Or he wants to drive to Kaduna from Lagos to use it to learn. I wonder if he will survive that journey. And that's what many people do in cryptocurrency. The day they join my group, they're already asking me, oh yeah, give me coin, let me buy. Give me coin. Why should I give you coin? If you are going to invest, you yourself must know why you're investing in a coin. That's the knowledge we talk about. So if you don't find a way to make money while you sleep, you will work until you die. You know, because when you invest in a coin, you buy land and things like that, while you are sleeping, the things are appreciating in value. That's just the truth. Another statement accredited to this guy. And by the way, you know, this one of the richest men in the world. So he's an example on what he speaks about, you know. He says the best investment you can make is an investment in yourself. The more you learn, the more you will earn. And that is a fact also that I find. For instance, now, I know that no matter where I am in this world, even on the North Pole, if I have internet, I will still make money. That's just a fact that I know about myself. I will not be hungry. If I have a laptop or a phone and I have internet, that's all I need, you see. So now a few crypto statistics you need to have. I don't know if you can still hear me inside, my network is dancing.
Yeah.
Okay.
Yes, sir,
Can
please,
hear you.
yeah,
that's
please meet everyone, sir.
Just a few statistics about crypto in Africa and then in Nigeria, so that you know that, you know, many times as Black people, we look down on ourselves. We are sometimes not even aware of how much influence or impact we have in the field until the statistics are brought to us. I know you will assume that countries like America are massive in cryptocurrency, which is true, but they are not as massive as they ought to be. The reason is because many Western countries have options. We have very limited options. For instance, you cannot open a PayPal account in Nigeria and use it to receive money. They won't allow you. There are many of such platforms that will not allow you access because you are just from Africa. They are criminals, they are this and that. But if you check the statistics, there are more criminals in the Western world than even here. That's just the truth. There's corruption in every country, but they exclude you from certain access for their own reasons, which that's not the purpose of this class. But with cryptocurrency, like if you live in America, you have so many options for transactions. You have Cash App, PayPal, Square is a payment processor, Stripe. There are so many. And so why would you be interested in crypto when you have all these options? But in the third world, people have options, so they look for these alternatives. And so the rate of adoption in third world countries is massive. This statistic I'm showing you, I think, was earlier this year. And it says Africa becomes second largest region in peer-to-peer Bitcoin after North America. That is May of 2020. That's what happened. Africa that you look down on, you see. So, and transaction volumes in Nigeria in the last 5 years, Nigeria has traded 60,215 Bitcoins, valued at more than $566 million, which apart from the US is the largest volume worldwide on Paxful. Those who are in this space will know where Paxful is. Paxful is a crypto trading platform, you know, and this is a statistic from them. Then global transaction volumes. Nigeria and Southeast Asia led global crypto adoption in 2020. The source is there. If you need it, I can send it to you. Now, when I did this training, a few statistics, I'm sure it's far more than this now. They said that in the past 24 hours, BTC, okay, that's when it was 53K to 57. And Bitcoin's market capitalization at that time was 1 trillion. And blah, blah, blah. These are not so important right now. Now, getting down into this training, I want to tell you what the difference between Bitcoin, blockchain, and cryptocurrency, you know. And those who did my training last week, I already explained that to you. And I think most of the people who are here were in that training. I won't bother with this slide unless you want me to go back it again. You can send a message in the chat so that I can take it again. Now, there is something you need to know about cryptocurrency, and the fact that it's an invention. This thing never existed before 2010. Somebody created it. Somebody created cryptocurrency that you see. As at, okay, fine, I'm seeing people here, that's good. As at 2007 there was nothing called cryptocurrency. There was nothing called cryptocurrency. And the man who created the first, because you already know now that cryptocurrency is an application of blockchain technology, solving of a problem. I know I told you guys that last week. You know, cryptocurrency is the first product that blockchain was used to create. Blockchain is a technology. So it's kind of like the way you use Windows operating system to create Excel, PowerPoint, word processor, and all the rest of them. So that's the way it is. So before that time, before 2010, there was no such thing. People had aspired to achieve what Satoshi was eventually able to achieve way before, as at the early 90s, when the internet was just taking off. People were already dreaming and talking about having some kind of decentralized means of making payments. But the pieces, you know, there are some things that need to come together for a certain technology to take shape. So the pieces of that technology that needed to come together were not yet there. For instance, now, let me give you an example. We know now that we have enough technology to fly to the sun. It will only just take us many, many, many years. It's light years away, but you can fly to the sun. But there are challenges, technological challenges that need to be overcome. One would be the fact that the amount of time it takes to travel to the sun, you need generations of human beings to make that journey, because most of us, if you fly today let's even say you are 15 years, by the time that thing gets, that current technology, by the time it gets to the sun, you'll probably be over 100 years or dead. So that is, in practical terms, because of available technology right now, that is not possible. But we know that if technologies are available, it can be done. You need material that is strong enough to withstand the heat of the sun, which we don't currently have. And so there are a lot of gaps in technology that make that journey possible. In the same way, there were gaps in technology before 2010. And this guy came together and used cryptography and decentralized systems to cobble together a technology that was used to create Bitcoin. For the first time, man was able to create what you call a decentralized system. Now, I need to quickly explain that to you. The architecture of the internet today is what you call centralized systems, where you have CNN.com, Google.com, all those .com, Facebook.com, they are resident inside the server somewhere, or inside servers, or inside data centers. No matter what you call it, they have a central location that when you type in google.com, your computer connects to that central point. Now that has its many weaknesses. One, if that central point is attacked and bulldozed, I can stroll into that server and collect all the data that I need. And that's a major weakness. It is what they call a single point of weakness. And that weakness is strong enough that it can collapse the entire structure. So that method of centralized centralized architecture of the internet was always something that computer scientists wanted to move away from. And then the guy who created the way to move away from it, he created it, used the technology to create Bitcoin, and then poof, he disappeared. So we don't know who he is, but he left documents on the internet. One of the documents is the Bitcoin white paper, which he released, I think, in 2009, as an academic thesis and a proposal for a decentralized technology that can be used to create a peer-to-peer decentralized currency, which became Bitcoin. So I needed to give you a little bit of that background so that you will be follow me on what I'm saying. So there are centralized systems. Decentralized systems are relatively new, maybe 10 years old, but they are taking over the internet. When we say decentralized, what we mean is that Bitcoin is not hosted on a server somewhere. Rather, it is hosted in thousands of computers around the world. The people who host Bitcoin are called miners. Some of them are called miners, but not everybody is a miner. For instance, on my website, AstriPay, I run a full Bitcoin.
Oh, wait, so please leave that place, please. You are not the one frying egg. Leave there.
Tell him to leave that place. Please, can you mute your microphone so that we can avoid that? Okay, so see, that's the problem. Kind of lost my trend now. So anyway, that is what that guy did, Satoshi. He finished it, and even the last correspondence he had with the software guys, they collaborated together, is on the internet. You can look for it and you see it. And after that time, he just disappeared and nobody knows where he is. The tokenomics of Bitcoin, I think it's on record that Satoshi kept 1 million units of Bitcoin for himself. Now, who he is, we don't know. A few years ago, there was a transfer, a movement from one wallet that has been dormant almost since the beginning of Bitcoin. The Bitcoin was in that wallet. It has never been moved. Not even one has been moved. But I think 2 or 3 years ago, there was a transfer from that wallet. People were speculating, well, that could be Satoshi's wallet. Nobody knows really. And I think it was a wise thing for him to disappear because what he created is a threat to the current global economic structure. Because what you have happening is that people are realizing more and more that, first of all, banks are crooks. Number two, the current banking system is not really structured to favor the poor man, the average man on the street. So the question now becomes, why should I go and put my 50,000 naira in a bank when tomorrow they can collapse? Number two, the interest rate they give me is rubbish, and a whole lot of other things. So what Satoshi created actually is a way for you to have your bank in your wallet, in your pocket, and you are responsible for keeping it. If you read, if you went, I think all of us went to school, if I'm not making an assumption, but it's a good assumption to make. And we were taught in school that the history of banking is that people needed some trustworthy guy to leave money with. Sometimes they wanted to do target savings. Some were going to war. They would leave their valuables with Mr. A, who would be around, or whoever. And that's how banking came about. But what Satoshi has successfully done is to create a system where you can keep your bank by yourself. You don't need any bank to keep your money for you. As long as you follow proper security protocols, really, it's almost impossible for a hacker to hack you if you carefully follow what you should follow. Because the fear and paranoia that people have most times is, oh, nothing is safe on the internet. Yes, but is anything safe offline? It's God that protects you now, and then you also take measures to protect yourself. That's why you have a door. That's why you have a wall in your compound. Some people buy guns. So nothing in this world really is safe if you take it from that angle. So enough with the fear of, oh, they will steal my things online. They steal things offline also. So why do people trade cryptocurrency? One, cryptocurrencies have what you call price volatility or price fluctuation. Any asset class that price goes up and down, you can trade. If the price is static, why bother trading? It just becomes a storage of value. So that's why you have things like people trading foreign currency, people trading commodities, beans, rice, gold, tin, bauxite. People trade all those things. Crude oil. People trade crude oil. They know, they anticipate that, oh, because of so and so news that's coming out of so and so country, crude oil price will go up. So let me buy some now. So what they do, and this actually happens. Forget what the one they trade on the Forex platforms. That's not the one I'm talking about. People buy large quantities of crude oil, store them in FPSO offshore, and they wait for price. They wait for prices. These are massive institutions. They wait for prices to go up, and when prices go up, they sell. So because crude oil has price movement up and down. So the one reasons why you're able to trade crypto, why you should trade crypto, is the fact that the price of cryptos move up and down. That is a double-edged sword. You can take advantage of it. It can also slice you through. But that's why you need knowledge. Now, there are tools for analysis also, just like every other market, like Forex and the rest. The same tools you use for analyzing Forex and other stock markets or in the indices and the rest of them can be used to analyze cryptocurrencies because of the fact that there's price movement, and it's the same fundamental things that drive price in all markets that also drive price in the crypto market. And another thing is that there's liquidity. Any market that has very low liquidity is a very difficult market to trade. What I mean by liquidity is this. If you have a coin, for instance, to trade, and all the liquidity or all the money that is trying to buy and sell that coin is just $10,000, you will be on a long thing though, because if you buy it when it goes up, to get who will buy it from you will be tough because there's not much money moving around in that market. But if you have a coin that is like maybe 2 billion, 100 million, 500 million, that is a market that has reasonable liquidity. So if you buy in a market that is very liquid, it's also very easy to sell off when the price goes up. Then actually, liquidity is almost the same as market capitalization. What I meant here is that cryptocurrency has consistently demonstrated growth in market capitalization. I remember 2016 when the entire crypto market was 200 million. And to us, it was big then. But as at, I don't know about today, but a few weeks ago, we had crossed 2.3 trillion in the same space of, how many years? 6 years. So that's massive growth, you know. So there's growth in capitalization in the crypto market. That's one of the reasons why you can trade it. Now I'm trying to move on to my next slide. Okay, good. And so people ask questions, will it always be like this? Will this price just keep growing? And I made to say yes. And there are a number of reasons why I say so. Why Bitcoin price will keep going.
Now I'm going to show you
maybe by the time it peaks out, we probably not be around.
So now you know how.
Mark, please, can you mute your microphone, please? Or let me mute you. Okay, good. I've muted you. So, number one is the fact that Bitcoin has deflationary characteristics. Now, I need to quickly let you know. Most times when I will be talking about cryptocurrency, you hear me talk more about Bitcoin, not because the others they are not important. The main reason is the fact that Bitcoin is the dominant coin, is the alpha male in the crypto space. So most times anything that happens to Bitcoin determines what happens in the market place. Because relatively, crypto market is small compared to other markets. But even in Forex, for instance, you know that generally there are major currencies, the dollar, the pound, the euro. When things happen in those economies, they generally affect the rest of the markets, maybe in small measures or big measure. I don't know, but there's some kind of impact that happens. So with Bitcoin, with cryptocurrency, that's exactly what happens. So Bitcoin has deflationary characteristics. Bitcoin, when this statement is what I'm trying to explain to you now, most currencies are impacted by inflation. The reason is because most governments keep printing more and more of those currencies. And so the more the supply of an item, the lower the price becomes. That is why you see that your buying power in all fiat currencies keeps dropping, including the dollar. What the dollar could buy as at 1970, it's not able to buy as at today. If you go online, go and do a little study about what money actually means. I'm talking about fiat currency now. Inflation is a consistent thing that impacts the buying power of all fiat currencies. On the contrary, it doesn't really happen like that with things like gold, with things like land, and also with things like Bitcoin. The reason is this. Look at my number 2 item. The total minting or mining of Bitcoin is limited to 21 million coins. I will come back to this point. And so far, only 18.5 million have been mined. Do you understand? So this limitation of total supply creates a forced scarcity, so to speak. Now, you hear that during the COVID-19, America was giving out money to their citizens. Where do you think that money came from? You think they had it kept in a vault somewhere? No. They just printed more of it and gave people. That's what happened. That's what happened. And that is what causes inflation and causes the buying power of a currency to drop. In the case of Bitcoin, that's not what happens. Bitcoin, you can't print more Bitcoin. I'm putting the print in air quotes now. You cannot produce more Bitcoin than what has already been programmed into the protocol of Bitcoin, the software of Bitcoin. It's impossible to do. So that being the case, kind of like gold, we know that there's a limit to the quantity of gold that can ever come out of the earth, and which is why gold keeps appreciating in value. As a matter of fact, most smart money companies, like all these guys in the stock market and in global markets generally, what happens is that, just a minute, please. What happens is that I hope this laptop will not go off. Can you guys hear me?
Yes,
okay,
we
fine.
can hear you.
Okay, fine. What happens, if you notice, since COVID-19, the price of gold has consistently been going up. The reason is this. All these guys in markets know that because of the excessive printing of money during COVID-19, inflation will come in a few years and their buying power will dwindle. So what they do is to run for safety in things like gold. And it's also in the same intervening period, we started seeing billionaires begin to buy Bitcoin because they are smart. You cannot be a billionaire if you're not smart with money. That's just the truth. You will lose it. So they are smart. They know that Bitcoin is deflationary in nature. In other words, when inflation is going up, Bitcoin's value goes further up instead of going down. Like when you have a land, the value of your land keeps going up. It doesn't go down generally. So it's the same way that's why you're seeing more and more money coming into Bitcoin. because you can never print more than 21 million coins, so to speak. So far, in fact, I'm sure we're closer to 19 million now than 18.5 coins that have been minted so far, mined so far of Bitcoin. And once you get to the 21st million coin, that is all. And so you have a limited supply of this coin that 7-8 billion human beings in the world will eventually need. So that accounts, let's not even talk about 8 billion. Let's say 500 million people are looking for 21 million coins. Can you see? And the world's population keeps going up. So the first demand that you are seeing and the first inelasticity of the supply of Bitcoin is what is responsible for that consistent upward price movement, because the demand never reduces, but the supply has a cap. I think I've spoken very well there. Even me myself, I'm impressed, even though I'm the one saying it. So now, in the mix of all this, there's an event that happens with Bitcoin that also further reinforces my statement that the price of Bitcoin will keep rising. And that's what you call the halving of Bitcoin, or some people call it the halvening of Bitcoin. Can you give me a minute, please? I'll be back. All right, so it's what we call the halving of Bitcoin. I'll quickly explain it to you and then show you a bit of the history of that event. Bitcoin, the last class I had with you guys last week, I talked about the blocks of Bitcoin, how the Bitcoin software releases a mathematical problem every 10 to 15 minutes. The first miner or miners to solve that problem get rewarded with free Bitcoin. That's what is actually called mining. They have softwares that you call mining rigs for mining or solving this problem. Now, and when they solve that problem and they approve it, the system, the network of Bitcoin approves that as the solution to that problem, it is, it's a word, I'm trying to use an alternative word. It is hashed into a block. In other words, let's kind of say that solution is stamped into the existing solutions as part of the previous solutions. So it's hashed into previous solutions. And those solutions that have been created and hashed, they are called blocks. So every 210,000 blocks, which takes an average of 4 years to attain, the reward for the 10 to 15 minute mining of BTC is reduced by half. This triggers a reduction in supply and thus price increase. If you, every month, for instance, there is, when you do on-chain and off-chain analysis, that's a different thing entirely, but I'll just quickly try to use that to explain. There is a fresh supply of Bitcoin that comes into circulation that wasn't there before. And most of that coin, that supply comes from miners, because they mine and they earn free Bitcoins. So some of them sell it off to exchanges for dollars or for money to operate their businesses with. These are companies. But on the other hand, some of them keep some of these coins. So what is happening is that at the beginning of Bitcoin, and I will take you to this web page here. At the beginning of Bitcoin, there was more quantity of Bitcoin released every 10 to 15 minutes than today. So if you plot the graph of Bitcoin, the supply of Bitcoin, it is going down. The supply is going down. But the demand of Bitcoin is going up, you see. And so it's a perfect recipe for continuous price increment, because first of all, the periodic supply of Bitcoin is dwindling. There's a cap to the supply of Bitcoin at 21 million, but there is no cap or limit placed on demand. So it's just simple mathematics. When you understand this, you just know that the economics of it are just excellent. There's no two ways about it, especially when you also realize the fact that it is impossible to stop Bitcoin, because Bitcoin is now in more than 8 to 10,000 nodal points. In other words, it is now decentralized in like close to 10,000 places. You know, we talked about centralized and decentralized systems. So for you to shut down Bitcoin, you need to shut down Bitcoin in all those thousands of computers all over the world at the same time within the 10 to 15 minute time frame. Otherwise, Bitcoin updates itself every every 10 to 15 minutes. So if you don't do that hack within the 10 to 15 minute window, Bitcoin will update, and then you have to start the hack afresh. So this is why, if you understand what Bitcoin is, you know that I'm not aware of any government in the world today that can stop it. Technology can improve maybe tomorrow, and then you probably see ability to do that, but it's almost impossible from current knowledge that's available. So now I want to show you something here. Good. This is the chart of all the halvings that have happened, or the halvings that have happened. In January of 2009, Bitcoin was launched. Please take note of that. But in 2012, okay, somebody just joined us. Let us get his microphone. Okay, good. So as at that time, the reward, this thing that you are seeing here, is the number of Bitcoins that the network was releasing to all miners. It was 50 Bitcoins every 10 to 15 minutes, you see. So as at that time, this was the quantity. I don't know what this statistic is, so let me not claim what I don't know. But by the first halving, which happened on the 28th of November, 2012, Bitcoin, you see what I said, 210,000 blocks. The block reward, or the reward to miners, reduced from 25 to, from 50 to 25. I hope you can see that. From 50 to 25. That therefore means that the amount of Bitcoin that was entering circulation was reduced by half by that November of 2012. Please hold on. So it reduced by half. Then again, in July of 2016, another 210,000 blocks were mined. So that brought us to 420. And then the quantity of supply within a 10-15 minute window of mining reduced from 25 to 12.5. And then the third halving happened. Now, this July 2016, I remember that Bitcoin was going, just before July, it was around $200 for one, you know. As a matter of fact, let me take you a bit, show you a bit of, let me see if this thing will go back up. Good. Okay, good. So these are the points at which these halvings happened. 2012, one happened. 2016, right here, another one happened. Then in 2020, one happened. Now look at what is going on. As at 2012, I can't remember the exact figure now, but I think Bitcoin was even less than $10 as at this point, you know. But when the halving happened, Bitcoin went up to $100. And then as at 2016, it was ranging between 500 and it will fall to 200. Now, another halving happened here. And immediately by 2017, price began to move up. And late 2016, actually, because I was I was fully in the market at that time, price began to move up. It went to 600, 700, 800. People were shouting, what's going on? We didn't understand the impact of that halving at that time. But by 2017, we're talking in the thousands for Bitcoin. By 2018, this was the highest point at that time. It was at 20, it was almost at $20,000 then. And then, of course, as is usual, it came down. And that's why we say, based on history, we know that, okay, maybe by the end of this year or first quarter of next year, Bitcoin value will come down. That's why we keep telling people, get ready. Be out of the market just before it happens. And then when it crashes, position to buy more, because that's actually when you make the money. When the market goes down is when you should be investing. But if you are trapped in the market and you don't have liquidity to buy more, then that's bad news. So, so market value, price of Bitcoin fell again. By 2019, it was really, really down. I think at a point we got to $3,000 from 20. So people were panicking and running. But I had understanding, I had knowledge. So I knew that this thing was going to come back up. So by May, June of 2020, another halving happened. I will show you in the chat now. Let me go back to that place. I think this is it. Good. So this is the third time this event was to happen, and it happened in May of 2020. Hold on, please. Somebody is calling me, so I want him to stop calling. So I'm just letting him know that I'm handling a class. Okay. 1 second. So, May of last year is when it happened. Before May, I knew there was going to be an explosion. So I just took small positions in some coins. I didn't even have too much liquidity at that time. But, and that's about the same time I also started training people, May, June. And I remember that Ethereum was somewhere around $50 or so. And I kept telling people, I didn't start telling people till it was like 150, 160 that they should buy Ethereum. They should buy Ethereum. So some people bought, they took me serious and bought, and they made a killing at that time because Ethereum went to, it got to as far as $500-700. And we were saying, this market don't try. But I kept saying this thing will get to 1.5, will get to 2,000. As 3 weeks ago or so, Ethereum was at $4,000 for one. And all those people that bought when I said buy, they began to look at me as if I was a prophet. But it's not prophecy. It's just knowledge. I knew that this thing was going to move. It was going to explode because of this halving event that we're talking about. Because, you know, the supply reduces. And so, and it's the same reason I know now that, and you know, like I told you, if Bitcoin goes up, the rest of the market goes up. So when Bitcoin was shooting to 50, 60,000, Ethereum was right behind it. Ripple was right behind it. Cardano, all the other coins were right. So if you bought all those coins and kept them, your bag would have just been too heavy by now. But it's never too late. You are here, and one of the things we'll be teaching you is how to even know which coin is a scam, because a lot of people get scammed, and that's the most painful thing for me. If they had just spent a little time to even just find knowledge, it will be difficult for people to scam you. I always ask myself, why would you put money with somebody you don't know? Because he created a website. Some people put, I know somebody who lost 9 million in one of these schemes. And people like us that say, pay 20K, let us teach you, which is peanuts compared to what you will make. People still hesitate that, 20,000 is big, can you not do it for 5,000? Do you know how much money I've spent acquiring knowledge? I've gone for trainings, but that's neither here nor there. So we've had the third halving, which is here. Now we're going to have the fourth halving in 2024. And we don't know when it will be. It depends on when the 210,000 blocks have been fully mined. But there are platforms online where you can check where we are. So the next, I think I should send you this screenshot, really. You need it to guide you. When you see that the number of blocks is getting to 830, 835,000, 830, then you should start buying aggressively. Any coin you see, just buy. If it's among the top 10, top 20, top 30 on CoinMarketCap, buy them and just position. You will be rewarded by the market. It's what we know that happens, you know. Another time it will happen will be in 2028, but you know, that's still some years away. So let's not bother with those ones. But now I hope you understand what Bitcoin halving is. So even if you do not trade daily, you can just position for those events to happen in the marketplace and you make a ton of money from them. It's a function of knowledge. So now, sometimes when you hear of trading, you see some squiggly stuff like this on the computer. I'm trying to look for some of the good. You see things like this. Aha, good. And some people that are not very good, they don't just like charts. Once they just see this, they just become confused, you know. And well, they have good reason to be. Maybe it's just not their style, or they don't know anything about charts. They are not interested, you know. So, but I want to quickly tell you, these charts that you see, I think the last class we had, I spent quite some time explaining to you what is behind a chart. A chart is trying to present to you certain events that are happening in the marketplace. That's just, it's trying to capture data for you. That's what it's doing. So that candlestick you see on the chart is representing demand and supply, which results in price movement or action. In economics, I don't know if you remember what they call price discovery. You know, forget economics. In a market, what is price discovery? It is when the seller and the buyer agree on a price. And there are markets where the general price of an item is already known. It rarely moves up. Those are what you call mature markets, and it rarely moves up. But there are adolescent markets, and then there are young markets. Crypto is a young market. So, like now, for cement, you know how much cement costs in Nigeria. They don't need to tell you, it's 3,600, depending on where you're buying. That's the range. By dry season, when construction picks up, you might see cement going to 3,700, 3,800, you know. And during the rainy season, it will come down because construction is less when the rains are falling. So that price you see is a consensus between buyers and sellers in the marketplace. That's how price is discovered. Do you see? The market doesn't just say today cement doesn't say today I'm going to sell myself at 3,600. No, it is when buyers and suppliers haggle, talk, negotiate. They say, okay, 3,600. Okay, they go to Mr. Johnson's store. His own is 3,700. They say, no. After all, Ogbefi on the other side is selling at 3,600. Let me go there and buy. Do you see? So that's how markets push and pull, and then the predominant price, prevailing price is established. Now, that candlestick you are seeing is showing you the prevailing price for a given time frame. It can be 10 minutes, 15 minutes, 1 hour, 2 hours, 4 hours, 12 hours, 1 day, 1 week, 1 month. Candlesticks can represent all of that. So the first thing you need to know is that, because we'll go into candlestick analysis by maybe tomorrow or the third day, is that any candlestick you are looking at is representing demand and supply, which shows in price. When demand and supply meet at a point, price is established. So when you are looking at those charts, don't let the charts confuse you. Always be aware that the chart is showing you the price of that asset class you are looking at. It's showing you the price, but price is a function of demand and supply. And the buyers in the marketplace are called bulls. When the market price is going up of an asset, the market is said to be bullish. When the market price of an item is coming down or an asset is coming down, that price is, or the market is termed as bearish. Now, why do they use the word bull and bear? Bulls, you know, have their head held high. You know that every bull that you see, it has its head held high. Even when a bull is attacking you, it will bend down and hit you up. The same way, when you look at a bear, the bear's head is always down. It's always looking for food on the ground. Even when it's not looking for food, the anatomy of a bear is structured in such a way that the head is always looking downwards. You know? So that's why they use those terms, bull and bear, bullish and bearish markets. So when a price is going up, it means that the demand for that particular thing is higher than the supply. And so the price of the thing is going up. And so the people who are pushing that price up, the market generally just calls them bulls. That's when they do market analysis, you hear they say, oh, the bulls overcame the bears. In other words, there was more demand than supply, and so price went up. When you say the bears had the day, in other words, there was more supply or sell-off in the market than those who wanted to buy or the buying. And so the price came down. Just fix that in your mind. This is what happens in markets. It's not more than that. Every other analysis is trying to establish what happened to a price in the past and using it to try to predict that this is what may likely happen. For instance, in cryptocurrency, historically, September has always been a very dicey month. Price keeps going down and up. It's just tempestuous in September. But generally, from October till December, the market trends up. These are just things you know by being in the marketplace. So when you see October coming, as a matter of fact, today is 1st of October, and Bitcoin has already jacked up from 42, 43 to 47. Do you see? These are just, there's a statement they make in market analysis that history repeats itself in markets. Because markets will always go back. People will behave in certain ways when they remember what happened. Let me give you an example. If, for instance, because the market is emotional, if, for instance, last year, Bitcoin fell to 41K and I lost money. Not lost money, my Bitcoin lost value, because crypto, you really don't lose unless you sell at a loss. So, and I lost value in my wallet. By the time September of this year comes around, there is what you will call fear. And that's why I have these two emotions below. There is hope in the market, there is fear and there's greed. Fear is, wow, you know, last year Bitcoin fell to 39, we don't fall to 41 again. Let me be careful, let me not buy, let me hold on. And so because of that, the price of Bitcoin will not rise. But I also know that, okay, October last year, market moved. Let me just wait, 1st or 2nd of October, I will check market again. If it's good, I will buy. Do you see? And so this emotion of fear is a human emotion. The market is full of human beings, not robots. Even if you are using robot to trade, it's a human being that manipulates that robot to set the trade settings. Do you see? So the fear in the market and the greed in the market also affect price movement or action. Greed in the sense that, my Bitcoin, I bought it at 41, maybe it's 49,000. I bet, let me sell half of it. Do you see? And then the same greed will make another person say, this thing has been moving from 41 to 42, 43. Let me buy. If we raise, they say it will reach 60. Or based on my analysis, I see that Bitcoin has the potential to get to 60. So let me buy. Now, these two emotions, please do not misconstrue. We are not saying whether greed, we are not talking about the morality of these emotions, whether greed is bad or fear is good or greed is good. That's not relevant to the discussion. We are just saying that there are emotions that move people to take action in the marketplace. So the two that are most dominant are greed and fear. There's also hope. Someone can buy a coin and hold it for the next 5 years because it's hopeful that it will go up. So these are two emotions that drive demand and supply, or buying and selling in the marketplace. And that is what you generally term as market psychology. If you notice, we've already entered day 2, and I decided to enter day 2 because we have a lot to cover in day 3. Because technical analysis will be taking you to live charts on the trading platforms to show you, and that takes quite a bit of time to do. So market structure. There are certain things that constitute market structure. One of them is support and resistance, the volume of liquidity in the market, and then a few other things. But so right now I want to deal with market structure, and we'll be talking about support and resistance, the basics of candlestick analysis, trend reversal candlesticks. Now we'll be talking about hammers, inverted hammers, spinning tops, or doji. Now, if these things don't make sense to you, be consoled with the fact that as at 2003, 2004, many of these things didn't make any sense to me too. And the first time I came across a candlestick chart, I didn't even know what it was, you see. So, and even today, I'm not saying that I'm an expert. There are people who know far more than me, you know. So I like to encourage people with what my own experience has been in the marketplace. So, and then we already talked about greed and fear in the marketplace. And then we'll talk about coins, how to know them, how to buy other coins, how to place an order to trade. By tomorrow, we'll deal more with those ones. Now, I already just told you about what a bullish movement in the market is when the price is moving up. So when you say bullish run, what you are saying is that the market is consistently trending up. So the market is bullish. The market is experiencing a bullish run. And then when you say bearish run, the market is consistently going down. So it's bearish. But let me quickly say something here. Historically, if you look at the whole history of Bitcoin, Bitcoin is generally bullish. Even though periodically you can have periods of maybe 5-6 months when Bitcoin becomes bearish. The reason, because we look at the history of Bitcoin, there was a time Bitcoin was selling for maybe several Bitcoins for less than for maybe 1 cent. Today, it's in multiples of thousands of percentage by which it has grown to where it is. So if you look at the overall chart of Bitcoin, you see that it's consistently moving up. But in that upward movement, there are speed breaks, there are bumps, there are potholes that happen, which is normal in any market, you know. So these are some of the terms you want to know. When they say go long or go short, to go long means to buy in the marketplace. You buy Bitcoin. If you bought Bitcoin, you tell somebody I went long on Bitcoin. That's just the market term. You know, asking why they call it, I don't know why they call it so. It's like asking me, why do they call a fan or a television a television? That's just what it's called. So you go long when you buy, you go short when you sell in the marketplace. So when you hear somebody say, I shorted Bitcoin, what it means is I sold Bitcoin. You see, or I took a short position on Bitcoin, I sold Bitcoin, or I placed a trade to sell Bitcoin at a future date. You know, that will be tending towards futures. You know, so support and resistance, these are terms in the marketplace. Then, of course, there are some you call chart patterns. Now, we will deal more with those ones. All these terms I talked about, there is a slide for that. So don't panic. They jumped over it. No, we're not jumping over it. So if you don't have an account with Binance, please open an account. I think I can send you this link. Let me see if I can copy it so that you can use my referral link to So if you do that, you probably get some percentage discount on your fees. You get percentage discount on your fees. Okay, okay, TJ, I'm just seeing your message now. Thank you. Let me see. I think more or less muted everybody. Okay, that's fine. All right. So here we are. Let me go back to my slide. And as a matter of fact, this first class, I like to make it as soft as possible so that you have a bit of an assessment of what it is you are going to be dealing with. Now, I have sent you the Binance link. If you haven't signed up, please sign up, because when we do the live sessions, you will need to be able to also log into your Binance to see what we are talking about. Now, a few ways to make money in cryptocurrency. You can lend cryptocurrency. You can do what is called staking. You can do what is called trading, and then you can do what is called P2P trading. Now, trading is what we will mostly be talking about in this training. Things like lending, staking, farming of cryptocurrency, more in the area of investing in crypto, because there are two tracks in the market generally. You either invest or you trade. Trade is short-term trading, day to day, week to week, month to month. That's what you do with trading. But there's also the case where you just invest in Bitcoin. I have ₦1 million. I don't need it for the next 2 years. So let me just buy some Bitcoin and keep. That one, you don't stress yourself. You look at the fundamentals of the coin, the project the coin is involved with. If you believe in the project and you believe that the coin is underpriced as at today, then you go ahead and buy. For instance, now, I keep telling people, when people were panicking, when Bitcoin really came down to 29K, and we're seeing all sorts of analysis, oh, Bitcoin will fall to 20, will fall to 12. I said, praise God now. If it falls to 12,000, that is my opportunity to buy more. So I don't panic over price falling like that. If Bitcoin falls to $3,000 today, that means I can buy maybe 1 or 2 and just keep now. Do you see? Because I know that the fundamentals of Bitcoin is good for investing. And it's the people who trade that panic all the time. The market will fall. If it falls, forget the coin, leave it, it will rise again. You see? So there's trading, there's investing. Trading is I buy in the morning. If it goes up in the afternoon, I sell it and take my profit. You see? Investing is holding for a long time. Now, if you are holding for a long time, there are a number of things you can do. That's why I said these lending, staking, they are more in the area of investing than day trading. And that's not for this class. In fact, I have created a different training track for investing, and there's a whole lot of knowledge there. I haven't brought out that training yet. I'll probably bring it out maybe in November, I don't know. Because I'm usually very busy, so I need to find a way to schedule that training, then advertise it and see the response I get from the market. But people need to know that there's a difference between investing and trading in crypto. So when you analyze market, there are 2 ways to analyze markets. There's fundamental analysis and there's technical analysis. In fundamental analysis, you look at a number of things. Now, these coins that you see, you hear of all kinds of coins, Cardano, Link, Chainlink, VET. There are close to 10,000 different coins right now as we speak. Now, each coin is not just a coin all by itself, no. A coin is created by people who are involved in a project so that they can use the coin to raise money. Generally, that's what it is. So, but Bitcoin is uniquely different in this regard, because Satoshi wasn't setting out to create a solution. He created a solution with his own money and released the solution free of charge on the internet. If you go to bitcoin.org, you will see the original software of Bitcoin. You can download itself. And then you run it. When you start running the software, you will see it connecting to all the other computers in the world that are holding Bitcoin. You just see it. You see the nodal points counting. I've tried to install Ethereum before. You see it counting, connecting to those points. So Bitcoin is unique. Ethereum was created as a token for people for the project founders of Ethereum to raise money and also to function as the means for paying transaction fees on the Ethereum network, you see. But that's not the aim of Ethereum. The aim of Ethereum was to create what you call programmable money. In fact, sometimes they say Ethereum is angling to create what you call a super computer that is based on the internet. And that is very likely possible because Ethereum has been used to create hundreds of different ecosystems for coins. Now, so every project has the problem it is trying to solve. Let me give you an example. Chainlink, for instance, is what you call a DeFi oracle. Now let me explain that to you. Decentralized finance needs data from offline and online events that are happening to be fed into the algorithm that runs any decentralized finance platform. Decentralized finance is projects like Uniswap, PancakeSwap, and the rest of that. Aave is another decentralized finance. When you say it's decentralized, what you mean is that they create Binance, for instance, is a centralized exchange because it's owned by a certain group of directors or one director. Now, decentralized finance is something like Uniswap. It's kind of like Binance, but it's not owned by one person. It is owned by every holder of that coin. You see? So, Chainlink is created to supply data feed or oracle. A data feed like that is called what they call an oracle. An oracle gathers offline and online data and feeds it real time to those platforms that need it. It's a layer 2 service that things like decentralized finance or DeFi need for them to function. So now, my understanding of the purpose of Chainlink shows me that the need for Chainlink is massive. Let me explain to you why. Even a project like Cardano recently signed a partnership with Chainlink because they need data. I don't know if you heard the word that data is the new oil. I think people in Nigeria should start removing their mind from oil. Acquire knowledge in other technologies and you'll be rich. So data is needed for all these platforms. Chainlink set out to create a platform that supplies data and they're doing extremely well. I think they are dominant in the Ethereum DeFi space. Chainlink is the dominant oracle. And it's likely be the dominant oracle in the Cardano space. When you hear me use terms like ecosystem, please don't worry. You will eventually understand what I'm saying because there's no simpler way to, to explain some of these things. But let me just quickly explain to you what I mean by when I say Ethereum ecosystem. Sorry, excuse me. What I mean. Ethereum is a coin that can be used to create other cryptocurrencies. When a coin is used to create a different cryptocurrency, that cryptocurrency is called a token. It's a token of Ethereum. Ethereum was used to create that token. Examples would be 1inch exchange, Uniswap, which other one? There are many. Aave was initially created with Ethereum. So all those coins that were created using Ethereum constitute the Ethereum ecosystem. Do you understand that now? Good. Now, there are many other coins like that. Cardano, for instance, has its own ecosystem of tokens or cryptocurrencies that were created using Ethereum. Matic is another one. I can't really remember them now. Binance Smart Chain is another one. You see, so every coin has a project that they are trying to solve. So when you are doing your fundamental analysis, you look at the project that coin is involved with. What are they trying to solve? And that's the one we call the use case of that project. The use case of that project. So when you locate what they are trying to solve and you believe that that problem they are trying to solve is big and is worthwhile, then it becomes clear to you that, oh, I can buy this coin. Let me give you an example. If you solve a big enough problem, you will become big. Google, for instance, when Sergey Brin and Schmidt, when they proposed to their professor in school that they wanted to create, they didn't have a name, but they wanted to, the internet was growing so fast. If you didn't have the exact URL of a website, it was impossible to find it. If you didn't know that, oh, the website is cnn.com, not cnn.xyz, you won't be able to find that website. And these guys saw a big problem. And they said, they wrote a thesis and said, oh, we can solve this problem. Their professor said, it's not commercially viable. They went ahead anyway, and the rest is history. Those guys are billionaires today. So, and if you quantify the problem they were trying to solve, that problem is a gazillion-dollar problem. Imagine an internet today, if without Google, you will be lost. The internet is a bottomless ocean, and you're trying to look for a needle inside that place. It's impossible now. But these guys created Google. Once you register a domain name, Google will index that domain name and file it away somewhere. When somebody types that domain name, peter.com, he wants to start, if he's not sure if it's .com or .net, just types Peter. It will bring out from its archives what it has recorded and show you. It makes life easy. So those guys solved a big, big, big problem. And it was inevitable that they would make billions. That's a fact. In the same way, if a coin is solving a real world problem that is massive, that coin will do well. There's a coin called audio, and that coin is solving the difficulty musicians have in their market. Are you aware that many of the companies that promote musicians often dupe them? Sometimes they sell 1 million copies of a song and they tell the musician they sold only maybe 500,000. The musician is not really, he's too busy doing other things. And so they dupe them. At the end of the day, you release an album, all you see, the company makes it like 10 million naira, they give you 500K, that's what they made. And that's your share of what was made. They can under report. And so audio is creating a platform where musicians have control of the release of their music and the rest of that. And so to me, that is a big, big problem that those guys are trying to solve. So if I were looking at that coin, I would buy it. And one of the places you go to, I think I can just quickly show you. Okay, I already told you. Coin market cap. I think I told you the last time we had a meeting. When you go to coin market cap, you can look for each of the coins you want to analyze and read about them. They have an About Us page. You can go to their website and you read about them. You read it. Never be in a hurry to. Oh, okay, somebody says it's network. Yeah, it's normal. We'll have a recording for you. So never be in a hurry to just jump in, especially when you want to buy a coin and invest in it and hold it for a while. You need to be sure that that coin is involved in a really solid project. It's different from trading, you see. So for fundamental analysis, You look at the use case of that coin. You look at what we call the tokenomics of that coin. What we mean by tokenomics is the distribution structure of the coins that was created. For instance, if a coin is launched and it has 20 trillion coins, that's not a coin I want to invest in. That's what we call shit coins. So you want to know, first of all, how many coins did these people release? The fewer the coin, the more likely the price will go up. Let me explain to you why. If you have 1 million units of a coin, you need less money coming into that ecosystem to drive up the price than if you have 1 trillion units of a coin. So for the price to move by $1, if you have 1 trillion coins, you need $1 trillion for that coin to reach $1. You see. But if you have 1 million coins, all you need is $1 million and that coin will move. I hope you understand it now. That's the first thing when you look at the tokenomics. Number two, you want to find out what percentage of that coin was allocated to the founders of that project. If a project is created and they don't have that information, I generally will not buy that coin because it shows me that they are hiding information. And crypto is supposed to be transparent. So, or a coin is created and the software guys and the founders of that coin, they are holding 80% of the coins. For what now? Kilode? I will not buy that coin because tomorrow what will happen is that as that coin's price is going up, the founders will be selling off the coin to get their money back or to take some profit. And you see that as they are selling, the price will refuse to move up because when they sell in the millions, the supply exceeds the demand, and naturally, the price will go down. Do you understand? So that is another thing you look at. Another thing also you look at is some projects. Can't really remember any off the top of my head, but some projects look for private investors to give them money. So you find that billionaires give them money and they buy up majority of the coins. If you find that in a coin, that's a coin you don't want to invest in. You can trade it on short term, but you don't want to invest in it unless they dilute that structure. Because if I'm holding 1 billion units of a coin and it moves by even 50 cents, I will sell now. I will say I want to take part of my profit that I gave them to start off that project. So you look at the tokenomics of a coin. What we mean by tokenomics is the token distribution structure. That's just what that means. You look at the project use case and then look at the roadmap of the coin. The roadmap is like a calendar or a timetable of events that they intend to do. You know that when you build a software, you build it in phases. You can't finish building a software. It's a continuous project. So a coin is created as a token or means of making transactions inside a project. So you want to look at the timetable. For instance, Cardano, we already knew that Cardano's price would go up in September based on the fact that the smart contract level or layer of Cardano will be released. And it was released successfully. And we're seeing a lot of projects coming to the Cardano space. And that is that, about that. So you look at when you go to the website of any coin, you will see the project roadmap. It is there. It's just that most people do not have time to read because there are so many coins nowadays. So to even have time to read them is a challenge. But you can skim through, find out information about that coin before you invest in it. Now, the tools you would use for that would be CoinMarketCap, which I've already said to you, and CoinGecko. If we have to go to those two platforms to start showing you how it is done, I don't think this class will finish, but maybe one of these days during the training, we can just jump there and show you. Maybe I will even start with that tomorrow. Let's see how it goes. Now, so for fundamental analysis, you also find out what's going on social media. I forgot to write that here. There is a tool online you can use, Lunar Crush. Lunar Crush gathers data on all social media and then presents it to you with a score. So if a coin is trending massively on several social media, it is potentially likely, it is likely that that coin's price will go up. Depending on what it is trending for, if it's trending for negative news, well, the price will go down. And so there are tools online for doing social listening, and one of them is Lunar Crush. The other one is Nomics. Then there are major influencers. I'm still talking about fundamental analysis. You know, there are major influencers in social media that affect the movement of price of coins. If you have a massive followership on places like YouTube, generally, if you talk about a coin, the price will go up. That's just the way, because the market is small, you know, and some of those guys are BitBoy. So BitBoy is somebody you do well to follow on YouTube. It's not everything he says I believe, because I have a feeling that some of these guys buy a coin cheaply, then they come to talk about it so that price will go up and then they will cash out. And that is something I don't have proof, but I'm very convinced that that is what happens sometimes. Then Chico Crypto is another guy on YouTube you might want to follow. And then I already gave you Cointelegraph at the beginning of this class. Look at the live chat. That's where you get news. Cointelegraph, CoinDesk. Go on them, download their app, click on their notification. As news comes out, you will have news to know what is going on. So I already told you about those ones previously. Then get on Twitter. Almost all coin projects have a Twitter handle and a Telegram handle. Join them. And then look for them on YouTube so that you'll be conversant with what is going on the project. So I think this is a good place to stop so that we can use tomorrow and the next, the following day to really focus on technical analysis. So I hope you have understood what has been taught. And if you have questions, this would be a good time to unmute yourself and ask. Or you can raise your hand, then I'll mute you. You know, so it depends on what you want to do. But if you have been following me, I would assume you have questions, so we can deal with those questions right now. Thank you very much. So that's a pretty fast one. I think I'm getting better at it. Let me give you this link. While you are coming up with your questions, this is a very good website too, has a lot of knowledge. I've dropped it in the, this thing is structured for me to be talking with TJ. Okay, so now you have it. I've sent it to you. That's a link you want to follow. And let me also go to coinmarketcap.com. Questions. Is it because we are not many? Are you guys there? Let me just, while I'm waiting for you, let me just.
I think somebody is raising up his hand. I need Mark.
Okay, TJ, I can't hear you well. Somebody is what?
Up his hand, Mark.
Somebody raised his hand.
Yeah.
Let me check. Oh, okay, Aliyu. Okay, you can unmute yourself.
Hello, sir. Can you?
Yes, good evening.
Good evening, sir.
Yes, sir.
Yeah. I was saying your training so far is very interesting. I really understand it. I'm getting you properly.
Yes, sir.
There's no questions to ask.
Oh, wow. That means I passed my exam today. Okay. Okay. So while we are waiting for others who have questions, I just want to show you. If you can see the screen, please. Somebody is trying to talk there, right? Let me see.
With you.
Okay. Mercy, you have your hand up. Please okay, your mic is unmuted, so please go ahead and talk. Ask the question you want to ask. Hello. Hello. Please go ahead, Mercy. Maybe it's her internet that is acting up. So whenever you can talk, please go ahead and just interrupt me, so that I want to quickly show people something on CoinMarketCap, and tomorrow I think TJ and I will be handling the technical analysis session. So there's something I want to show you here. Okay, good. Now, can you see this website, CoinMarketCap? Please let me know if you can see it, so that I will not spend energy.
Yeah, we can see it.
Okay,
I
fine.
can see it.
Okay, Mercy, you still want to ask your question?
Yes.
Okay, please go ahead.
Okay. Good evening, everyone.
Good evening.
Please, I want to find out, assuming I bought Bitcoin worth ₦1 million some months back.
Yes.
How do I know the present conversion rate? And if I have such an amount in my wallet, how do I go about it as in part of it? Did you get my question right, sir?
It wasn't very clear to me. You say if you bought Bitcoin some months back, I'd be worth
some months back.
Yes.
Yes.
Okay.
Now,
Okay, no.
Hello?
Yeah, I'm listening to you. Somebody was talking. That's it.
Can I proceed?
Yes, I've muted him. Go ahead, please.
Okay. I said, as I bought Bitcoin, what's $1 million months back, as it is presently.
Yes.
How current conversion ratio, having the money in my wallet, how do I go about to sell off part of it?
Okay, there are a number of things there. You bought the Bitcoin. The first thing when you buy coins, you need to have a small diary, whether online or a physical one. You will write the Naira value you spent. You will write the quantity of that coin you bought. You know that Bitcoin is bought in decimal fractions. So I understand what you're saying. It can be confusing. So what you write is the quantity of Bitcoin you bought, maybe 0.05 or 0.5 Bitcoin. And then the value of Bitcoin as at the time you bought it.
Yeah.
Do you understand? So maybe at that time, that value, the 0.5 Bitcoin was worth $30,000. So you know that it's $30,000 that you bought at that time. So if in 3-4 months you see that $30,000 now becomes $40,000 or $50,000, you will see it in your wallet. You know that you have gained an additional $20,000 now. So if you now want to take your profit, You can sell off maybe $5,000 worth of it and say, I don't cash out small. Let me leave the rest. Or you can say, oh, this thing has gained $20,000. So let me sell $20,000 and take my money. It's my money. No, but the
please, I will private chat.
yes, sure.
Hello,
But
sir.
yeah, sure. You can private.
Continue with your training. There are. I just asked. Now I'll talk with you one-on-one. We'll chat.
And
you can proceed with the training.
And that's fine. Since you have asked the question, answering the question here will also help people. So let me finish answering.
Okay.
So yes, it will help people. I like such things to happen. So but that's why also when people trade, we always say it is better you use a stable coin like USDT to buy your coin. For instance, if you had used USDT to buy that Bitcoin, you will know that, oh, it is 100 units of USDT, which is $100 that I used to buy this Bitcoin. So you know you have a fixed price at which you started buying, and then you know now that today the value of Bitcoin is $80. So I have lost $20 on this transaction, or the value of Bitcoin that I bought at that time is $120. So I gained $20. Do you see? So that's the way these things work. All right, so just a minute, please. I'm trying to, somebody is doing a transaction with me. Just a minute, please. Okay. So I wanted to show you CoinMarketCap and the general layout. I think I did so at my last training, but I just talked about something just now without showing you. So let me quickly show you. Now, there's a coin you are interested in. You heard about it. The first way to even confirm whether that coin is a scam or not is this. Hold on, please. You will come to CoinMarketCap or CoinGecko and just type in that coin. Let's say, I just talked about Chainlink just now. So I will type in Chainlink here and just search for it. If I search for it, this is Chainlink. I click on it. It's ranked number 15 right now on CoinMarketCap's list. So as of today, immediately I see a lot of information here. Generally, if a coin is not listed on CoinMarketCap, I don't bother with it because there are too many scams in this marketplace. Before CoinMarketCap will list your coin, they would have investigated you. They would have done some checks on your coin to know that, oh, this coin is genuine or not. Of course, it's not 100%. Sometimes fake coins come on and then the people disappear with people's money. But if generally I'm looking at CoinMarketCap, the first 50 coins that are listed, there should be some reason to believe those projects. Then the next thing I want to see as I'm checking Chainlink is to go to what they wrote about Chainlink here. Look at it. Founded in 2017, Chainlink is a blockchain, blah, 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 blah. Then I read about it. You see a lot of things to read. Then when I read, this gives me information about this coin to know whether I want to even get involved with it or not, you see. Then I can go to their website. Now, when you hear of a coin, never go to Google to search for a coin because there are a lot of phishing sites online. Come to CoinMarketCap, look for the website, click on it. It will take you there. You see, that's a safer thing. That's something I just told you. So that's a trick you need to bear in mind. And then there's a plethora of information about the coin here, the market. When you want, sometimes people ask me, where can I get the coin to buy? If you click on markets, this one here, It will show you all the exchanges on which you can buy this particular coin. They are listed there, many, plenty. So I like Binance, so I like to buy on Binance. Sometimes I buy on FTX, or KuCoin. KuCoin is another exchange that I use. You don't have to be everywhere. But look at the Uniswap I just talked about just now. So that's the way that goes. And then if you want to know the price history of a coin, you click on this historical data, you see. And then holders, that's also important. You want news about it, fine, you get it here. You can click on news. Now, if you go to the home page of CoinMarketCap and you scroll to the bottom of it, you will see news. I hope I can get it. Let's refresh. Okay, good. Let's see. It's still opening, so let's wait a bit. Now, let me just quickly show you Cointelegraph, which is what I just talked about with you. Cointelegraph.com. This is so important too, very important. You need to pay attention. You can even subscribe to CoinMarketCap's roundup email so that you'll be getting regular updates on markets. It appears my internet is slow, so it's still trying to open. But if you are on CoinMarketCap on your phone, go to the bottom, you will see news items. Yeah, news. Those are important news in crypto markets. Then this one too are good. This one has opened. Can you see? This is Cointelegraph. Excuse me. So this is news. It says hackers exploit blah 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 to steal coins from customers on Coinbase. Coinbase is an exchange. Umbrella Network launches an Ethereum with cross-chain bridge to Binance Smart Chain, BSC. So these are things happening in crypto space. It's not all the news that will be relevant to you, but it's just good you keep track of what's going on. See how Kava is building a safe and powerful DeFi earning platform. Kava is a coin, it's one of the coins. So it's just good to be informed. If you say you are investing, you are trading, you want to be informed. Look at this. Biden admin weighing bank-like regulation for stablecoin issuers. Now, this particular news is heavy because this news will affect things. Any action the US government takes is impactful, especially in the financial sector, makes an impact on Bitcoin or cryptocurrencies. So you want to be informed at all times, Look at this, Bitcoin whales. When you say Bitcoin whales, what we mean is massive holders of Bitcoin. Those people that buy in the billions, in the hundreds of millions, they are the ones they call whales. So that's what I was telling you. If you see a coin that they have given so much of the coin at the ab initio to massive buyers like this, be careful. They say they move record BTC value as metric sounds alarm over price volatility. So you want to be informed about what's going on in the marketplace. So that's one of the places you go to. The other one is CoinDesk, which I already gave you, and the rest of that. So there's a ton of information you'll be able to get here, a lot of it. So I just wanted to quickly show you that you can learn about cryptocurrency here. Do you see that? Look at this. Alexandria is one of their platforms for learning. This is a glossary of all crypto terminologies. You can go there and just learn. These are platforms where you can earn Bitcoin or cryptocurrencies. There are video trainings here, so it's a lot. It's a lot. Calendars, free airdrops, ICO calendar, all kinds of things, So for today, I think we have communicated enough knowledge. Please get ready for tomorrow's class. Be here early so that we can dwell on other things. But know that tomorrow we're dealing more with technical analysis of markets. I might do a round of things that I remember that I didn't talk about. I'll just talk about them at the beginning of tomorrow's class, and then we will take it from there. So in the absence of further questions, I've been told that I passed very well today. I did a good job. So although I really like questions, it tells me that you are thinking about what I have said and you have disagreements or agreements. But this recording, I'll make it available to you later in the day. It takes a while to convert for me to upload it online. And so you can play it again. And if you have questions between now and tomorrow, please get them ready for the class. Thank you so much. TJ, I don't know if you have anything to say that you feel we probably missed out or will be useful to people. Hello?
I'm here, sir.
Yeah, just if you want to say one or two things to them.
Yeah, I think you said more, and we should look forward to tomorrow and get our marriage. Tomorrow we'll be diving a little bit into the charts and we'll go deeper. Yeah.
So thank you so much, TJ. For those who don't know, TJ is one of our teachers here also. He'll be teaching you tomorrow. So please get ready. I can see a hand up. Okay, Ali, you want to ask? You want to ask a question? Ali,
are you there?
Are you there? Okay, maybe that's a hand he raised before, sure.
Yeah.
All right, everybody. Thank you very much for attending the class. It's been an interesting one. I'll send you the video later tonight. Thank you. So I'll see you tomorrow.
All right, sir.
Good night.
Good night, sir. Good night, sir.